Speaking about the screen itself, let's take note of the markets. We do have Sacchitanand Uttekar of Tradebulls joining in for a quick technical check on the market. Sachi, before I come to you for your call on the market, one has to congratulate you for the call that you took on Indian hotels. The stock is at a record high right now. This is before the analyst day, announcements that the company had made. So you probably read the charts out there. Similar to that, if you could give us a sense on the market and some other stocks as well.
Thank you, Mangalam. Clearly, I think market is in a very difficult state. But if you look at some of the stock performances, there are pockets of strength which are still available, especially when you look at the relative strength. So even right now, the way both the indices are placed, clearly Nifty Bank is under pressure. It is managing to sustain above its 200-day exponential moving average support. But if you look at the candlestick formation, it's a falling tree formation, which is not a healthy sign for the index. So probably we may see some pressure when it comes to Nifty Bank. We may see it scaling lower towards that 49,650, 700 kind of a support. The only revival point for this particular index is in case if we see a very strong swing above that 50,430 mark, which is also the 5-day exponential moving average support. But when we look at the Nifty, the range of for Nifty is again contracting. We have seen 23,250 on the lower side acting as a support, but on the higher side, there needs to be a strong, swing towards 23,740. So once we see a breakout from this particular range, we may see a very strong revival. Also, if you look at the immediate stats, we are observing a positive divergence on the Nifty. So that's why we are avoiding, fresh short positions here. And even right now, the stocks that are looking positive are something like M&M. Wherein if you look at the last 4 trading sessions, the relative strength has been very strong. The stock has been sustaining above its 5 and 20 exponential moving averages despite of the market volatility. And there's a good positive crossover on the averages, which is indicating a strong momentum flow. So we're expecting that this particular rally, at least for the day, may stretch towards 3020. Eventually, the target is placed somewhere close to around 3100. We are recommending building long positions in M&M, keeping a stop loss at 2910 on a closing basis. The other strength is witnessed in some of the pharma packs, and within that, Divi's Lab has broken out from a triangle formation. Even here, the relative strength has been better. It has been forming a strong base somewhere close to around 5900. The base now looks elevated, so we are expecting that this particular mood of momentum may continue towards 6030. The eventual target is placed at 6070, and that's why we are recommending building fresh long positions here with a stop loss at 5920.
Okay, all right, Sachi, thanks a lot for that. By the way, as we are tracking the markets,